Good weekend all. Ira Epstein of Linn Associates with your financial market wrap-up. And I wanted to get this out for you for Friday, Saturday, and Sunday, knowing how the markets have reacted. But this is for Friday, the 26th of February, 2021, just before 5 p.m. Central Time. Well, as you can see, another big down day in the Dow, the S&P, not so terrible in the S&P. 40 points would have been a lot worse. The Russell barely down at all. And the NASDAQ, which has been pretty much the leader to the downside, starting to stabilize and giving you a rally today. Bonds and notes, well, you know, you hit 161 yesterday in the 10-year note. You've come back a little bit off those numbers. Bonds getting a bigger rally. So the question is, did the market overdo the big move to the upside that we saw on real interest rates? Gold getting smashed. Remember what we talked about during the week? Regardless of the story gold had, hoping for inflation, didn't get it during the whole COVID, and now with higher interest rates going against it, down. And copper was so far ahead of itself that I think a correction carried that and took the other metals with it. That's my guess. Dollar up sharply. The market doesn't know what to make out of the higher rates. Is that beneficial to the dollar, or is it just a sign that the world economies are going to get better and the dollar comes up, then slips back, and these others get a bid? You're in that wishy-washy time frame. But as the dollar gets strong, you're putting pressure on the grain markets. You certainly put some pressure on the energies, but I don't know if it's dollar related on the energies as much as that OPEC meets this week. And at that meeting, I would think that they're going to let Saudi Arabia, or Saudi Arabia will demand that they run OPEC for all purposes with Russia, put back some of the oil that they voluntarily took off the market to get it to stabilize. They're entitled to put some back on. I don't think the others are just yet. We'll see. I would guess that that's going to happen in April, but you just never know. We'll see on this meeting this week. When you look at a monthly area chart of closes, and we finished the month off today, the market did gain for the month. It's hard to believe with this big sell-off that it gained, but that's how well the beginning of the month was, and you gained 2.8%. Still, on a monthly basis, an all-time high close on a closing basis of 2.81%. You were down another 2.4% in the S&P this week. Last week, you were down, let me just get this, down 2.4 this week, down 0.71 last week from an all-time high. So while you're getting declines, are they of the merit of 10% in areas like that on a closing basis? They are not. Closing basis. All right. So let's go to the weekly chart. On the weekly chart, you can see we're down 2.4%, and last week, just so you can see that 0.71. So you've pulled back in the market. Okay, a pullback isn't a bear trend. It's a pullback. When we take a look at the weekly charts with the swing lines, you've had, past tense, you've had a higher high, a lower low. That is no trend. We're both not blind. We can see the market went to all-time highs. But in the sense, is the swing line giving you a clean pattern? And the quote there is the clean, higher highs, higher lows? No. So there was something else dragging the market. And I'll show you that in a moment. The market has stayed over the 18-week average of closes. If the market falls and you come from a high level, often, I can't use the word always, it wouldn't be accurate. Often, the market tries to get back to what I call the line in the sand, that 18-week average. That's around 37.06. We'll see if, in fact, that is the case. When you look at Bollinger Bands, you were unable to make it to that upper number. I recognized that during the week, and I mentioned that on certain times to my subscribers, that it was the window envelope that was in play, not that. I don't show window envelopes here. I do that in my morning subscriber video. And by the way, I'm not going to go any further. I want to ask a favor of you. I should have done this at the beginning. If you like these videos, give me a like. If you have a question for me on YouTube, it's a good place to ask it. If I can, it's not that I'm not willing to. The government only allows me to do so many things. I am a registered broker, and the disclaimer would have to be this long compared to an answer yes or no. I got to be very careful. But the likes, if you like it, that helps me a lot. All right. So as I said, it was the window envelopes at work. Are we trending? We still aren't trending. So what was it? It was this, the embedded reading. All right. That's what kept this alive. You've lost that now. Could it regain it next week? It certainly could. You only finished at a 77.34. The fact that the market's at the bottom quadrant of this week doesn't bode well for the market to gain it back. But if it falls, you can see where I'm looking for. If it gains it back, it's all that much stronger. We'll see what happens. I would assume that this week's low will be tested somewhere along the line next week. In the NASDAQ, again, don't get panicked here. What this market's done is you had an embedded reading that you lost, and you often make a run for the closest moving average. You take a look at that. That number is 12,698. You hit 12,662, and you closed about 30 points, actually 300 points over that. Not the world's worst trade, right? So what can I tell you? You know, I realize people panic with these things, but you haven't turned it down. You lost your upside momentum in both indices. That, at a very minimum, often means waffling around a little bit. Is February often a good month in the markets? Not, but not bad. On the weekly chart in the Dow, okay, outside week down, lost the embedded reading. Could you be on track to try to make a run to the 18-week average? You could. I'm going to repeat what my research has shown. The odds when this happens of a daily chart getting to back to its key 18-day moving average is much greater than it does on the weekly. That doesn't mean the weekly hasn't lost its momentum, but I go to the daily on this kind of chart to see what's going on. And this market did lose its embedded reading. It too can get it back with a strong week next week. And if it does fall hard, I look for that 18-week average if it falls hard. When we get over to the Russell, this is a stronger market. You did not lose the embedded reading. This market is still, therefore, being bought, in my opinion, by the pros on a weekly basis until that occurs. Their target, probably new highs. Rotation in the market, certainly. That's part of what's going on. Then we get to the 30-year bonds, and you've again closed under the 18-week average. Now, it's this week that you were under it. Last week you were under it, if you take a look. The week before, I don't believe you were. The market finished basically right on it. So it's 2 weeks under it. Okay, you can go up to 5. Do I think it's going to go to 5? No. Now that you're this far under the 100-week average of closes, what do you think that becomes on rallies? That becomes your first resistance point. The secondary one is the 18-week average, and that'll drop down on you pretty hard probably this week, because you're going to lose numbers back here that are much lower in the weighting right through here. You also have an embedded reading. That's all bearish. So the rallies in this market, until that's gone, what are they? Selling opportunities for the pros. Do I think they'll sell under a Bollinger Band? No. So I think that's the number they're looking at. In the 10-year note, you went down. What number did you hold? The first challenge, right here of the 100-week average. You are not embedded here. The curve yield on the front end is very different than the back end. The market's under here. I would look, it's 2 weeks in a row under. I'm going to look for the market this week and next week to try to fight to get over that lower Bollinger Band. And no, I don't think you're going to attract new selling here. Could I be wrong? Of course. I mean, that's always a possibility, but that's what I'm expecting. In the dollar index, where do you think I'd tell you right now that the resistance on this rally could pop up very easily? 18-week average. Why wouldn't I say that? 9107.5. You can see why I'm saying it. That is the number. Momentum is up. You're not in a trend. You have a lower low and a higher high, and you've had that without this week at all. There's just been nothing to really do in this marketplace, and I think that's where you're stuck in these. You're sort of waiting to see the next event. And it's the flip-flop, because 40% of the dollar index is made up of the euro. If the dollar's up, this generally goes down. And that's what you're getting. But where's the support in this market? Right here. Are we trending? No. Can it start a trend? Not next week. Why? You have a higher high, lower low. You can't start a trend off of that unless you first drop down and then go up over this week's high. Then you can start an uptrend. Cannot start a downtrend on this chart pattern. In the Canadian dollar, where's the resistance point? And what do I tell you each and every time in my videos? The first time you hit a Bollinger Band on the upside or the downside, especially when you have a wider part, that is where what do the pros do? I think they program themselves, take money off the table. Not a bad play given where the market is, a monster play. But that's what they do. Why? Do you ever ask yourself why? Because 95% of the time the market's going to trade within this algorithm, the bands. That's what it does. That's the mathematics of the algorithm. It's created to do that. So if you're looking for a spot on a chart and you don't know what to do, where could that market go to? Well, why wouldn't I go to something that gives a 95% probability? I would look for that. Doesn't mean it has to stop there. There's a 5% chance it can keep going, but 95%, God, it's like owning what? I want to be on the casino side on 95% probabilities. That's not a bet against the market, by the way. It's a bet that the market won't stay over the band. It does not mean it has to fall far. It does not mean it's turning into a downtrend. It's going to stay within the band, and that's what it means. In the Japanese yen, you're now oversold. You've hit the lower bands. You want to be pressing under a lower Bollinger Band. If 5% of the time is all you're going to stay under the band, why would I want to do that? So I'd be telling my clients, covering against the Bollinger Band. If it falls, it falls. I'm now looking for support between here and that 100-week moving average. And no, oversold, not interested. Bitcoin. Look at this reversal, all-time high. Look at the week's range. You think you don't have to be very rich to trade this? Get serious. Nearly 58,000 down to 44,270 in dollars. Wow, that's big. So you have to want to really own volatility to own these markets. Is the market still bullish? You're not ready to hear this, but I got to tell you, oh yeah. You haven't taken out anything here to break the pattern. You haven't gotten under the 28,900. And when you reopen this week, you're going to jump on this moving average again. It's going to climb. Why? Well, last week it was 27,432, and the week before, 24,978. Let's call this jumping 2,500 bucks a week. Then it jumped from 2,500 is going to give you 29.3. I'm in the ballpark. So I think it's going to get up to about 30,000, 31,000, right in that range, maybe a little higher. It'll be certainly over this number. I think the pros will be looking that if you had a big break, that's still the number they'd be looking to own the market at again. Doesn't mean it's going there. But with an embedded reading, I still think that's a number to look at. In Brent versus WTI crude. Lower and low, higher high. But here's the real thing that happened. The market fought a battle right here. At that 18-week average, it had gotten over it, it's playing at it, and then it broke itself out right through here, and it started galloping higher right now. That's what's basically going on. When you take a look at a weekly chart, did you not get up to the upper Bollinger Band? Well, let's take a look here. You weren't there this week. The next week, this was last week, 65.49, and the Bollinger Band, you went up to it and you turned right back down. Okay, but you're embedded. I think the pros are still bullish. And I'm getting a bullish crossover on the chart when we reopen, I think, on Sunday night. Why? I think that 18-week is going to get over the 100-week. So I still see support in this market. Back down, admittedly, about $12, $13. I am not saying it's going there. I am saying that you're getting another bullish support leg and you're still embedded. I don't see anything bearish. In WTI, it's the same story, but you had the crossover. Here's the market last week. You had your crossover, you made a higher high already, still looking bullish. Don't see anything here that has turned the trend to the downside. Gasoline, still embedded, up at the upper band. No, I don't tell you to buy the upper band, but I point out what's going on. Spring's coming. Do you think you're going to go driving this spring? Do you know how many Americans, how many millions of Americans are going to hit the road? I'm not saying they're going to jump on jets or cruise ships to go abroad. Are they going out? Can they wait to get outside of their city and do something? Come on. Gasoline demand, I think, is going to go crazy this spring and summer. But that's just my thought. Maybe I'm wrong. I'm also looking for another bullish crossover here with an embedded reading. So you put it all together, it's one interesting time. The weather's warming up. The question for the nat gas will be going forward, will that market now have to wait as we get into the spring months? I know you think I'm nuts, but April's only 4 or 5 weeks away, right? As we get into the spring months, the demand for heating fuel, nat gas, will drop off, and the market's waiting then for the air conditioning season. Things you got to think about ahead of time. I talk about this and a lot more in my morning updates. Now, the morning updates are so important because by the time I start recording, 5:40 in the morning, I've already read for an hour and a half or so what's going on in Asia, Europe, and I'm bringing it to you. The whole idea of this is simple. You're a trader. What does that person think of the market? You watch CNBC. Do you want to see at the end of the day what the different traders think in their hot money segments? You might want to see a Kramer. You might want to be watching Bloomberg for their different segments during the day. There's certain ones. Well, I'm hoping that you think in the futures market, I might be one of those guys. My subscribers, we looked up today in Google Ad on my website. The vast majority of you are watching our videos on your mobile phones. The vast majority, not desktops, the vast. Well, with this subscription, I give you an application for it. So as soon as it comes out, it hits your phone. If you're a subscriber, you're seeing my paid subscriber video the same way you're viewing the freebies right here. Works the same way. You just click a button, it's going to play for you right away. Plus, I'm going to cover the markets in this exact sequence each and every time. You can scroll, you can get there with what you want in the way that you want in these markets. So, you're starting off the day, an idea, a trade idea. This is posted before 6:30 a.m. Central Time. Goes around the world. Come on. What is the cost of it for a 30-day period to give it a try? The price of a good cup of Starbucks or Pete's or whatever premium coffee. $7.95 for the first 30 days. Simply go to www.iraepstein.com. All the information is there under research. You have a great weekend.